Hello, everyone. Mike Arnold here, co-founder, Path Trading Partners, along with Bob Iacchino. Sorry for the early start this week. I'm going to try to keep them going, but if I don't show up for a day, it's because there's too much going on, juggling too many things. This is one of those weeks where the perfect storm has come together. That's why we're starting, and we'll have to. I'll try to start again tomorrow early. So if you're watching on replay, thank you for tuning in. Uh, Start time will probably be 7:25 to 7:30. It might even be a few minutes earlier than today, so just watch when the live thing pops up. Good morning, Patrick. Good morning, Anissa. I'm expecting lighter viewership today since most people expect it to start later still. So, again, thank you for tuning in if you're watching it on recording. And speaking of lighter viewership, it's lighter economic releases this week. Today, hey, Eric, good morning. We have nothing today. Consumer inflation, that's a very minor number. It'll be interesting to see how it comes out, but very minor. Then you got some bill auctions tomorrow. The big numbers, retail sales coming out at 7:30. And you got some housing stuff. And then we got a cash and carry speaking, cash carry Fed, from the Fed. What else do we have Wednesday? We have some mortgage stuff on Wednesday. We have housing starts. That's about the most important things. We, of course, have the EAI numbers. Oh, and then we have the FOMC meeting minutes, which is probably about the other most important thing this week. But I don't know if it's really going to change anything with the market just yet. I mean, everybody's in pause mode. Thursday, as always, initial unemployment, continuing unemployment or jobless claims, Fed Philly index. Again, very light week. And Friday, nothing, just the rig counts for crude traders. So we can knock a lot of that off the thing and really just remember FOMC minutes on Wednesday afternoon and tomorrow's retail sales. Tesla down, more price cuts coming. Other than that, a very quiet morning. Mixed sort of rotation into some defensive stuff, consumer defensive industrials, a little technology, healthcare, consumer cyclical, and energy down. Energy on a little pullback after the breakout, but not breaking any critical levels. What else? Fed Watch tool, we're still at a pause solidly through March, and then one cut in May is where we sit. Nothing's changed with that. Fear and greed still solidly in the middle of greed mode, so we haven't even pulled back to neutral mode. That's where we sit right now. Nothing's really changed on our other market valuation stuff either. Most stuff or things are overvalued even with this minor pullback. So, good morning, PMG. This morning, not much in earnings. After the close, again, it's getting quiet. It's getting quiet. The interesting things this week will be Home Depot tomorrow morning before the open. That's going to be important. What else do we have? Nothing really tomorrow after the close. Wednesday, we got Target, which will be interesting. Cisco, always still watching Cisco ever since the .com era. Thursday, Walmart is sort of a biggie. So Home Depot, Target, Walmart, Applied Materials after the close on Thursday, and John Deere on Friday. But that's very, very quiet. Nothing that's really going to shake the markets a bit. The ones that could have the biggest effect would really be probably Walmart and Home Depot if there's something really strange in it, or Walmart got with the guidance. Other than that, those stocks will move, but whether they'll be market moving is a different question. Again, this is gonna be very quick. Right now we had a little on the 4-hour. It did not trigger. You see here. It's more of a flagging pattern. I was just watching. It couldn't even get up to. It did not trigger on the 4, and I'm watching the higher time frames. Why am I watching the higher time frames? Especially the 4-hour and the daily. It's running out of a little momentum. We got cycles at the bottom. If we do close above Friday's high, it's a very aggressive %B buy that's only on a close above the high. And look where the breakdown zone is now. It's between the 50 and the 62.5. And remember, there are two kinds of corrections. We've talked about this. There's, on the way back up, there would be the retracement or the sideways. So we've come down to that area of the 50. If that area of the 50 breaks, 44.37 is the next key area. And then remember, we're into the weekly rotation zone. And the next major area I'd watch on the weekly would be about, 44.37 and then 43.60. And we're not yet at weekly cycle bottoms. So we have a little potential mismatch, even if the dailies turn up. And you have the first cross the rotation zone on the dailies. And the only thing, now, can a bounce be tradable? Yeah. If there's a great bottoming pattern today and then we followed through with a close above Friday's high, that's a tradable pattern for me, from my perspective. However, from a stop perspective, I would be very, very aggressive and not give it a ton of room. We've had a lot of downwards pressure. If it trails and we then get above on a closing basis of 62.5, then I will watch for the retest the high areas. But up through this, especially that breakdown zone coming in about 45.65, right in the middle of the 50 to 62.5, we could easily, even if we bounced all the way up there, roll over again. That's why any bottoming pattern I'm watching for or any follow through has to be, from my perspective, aggressive with the trailing stop. Good morning, Sterling. Have a good week back at work. So that pretty much holds true for the S&P, for the NASDAQ. Now, the S&P on Friday also came down to hit the harmonic, which we already had. Now I'm just going to bump this. It's not a long-term pausing bar yet. We don't have that yet, but it reinforces the 44.36, intermediate level, then 44.15, and then 43.90 are all the key levels should Friday's low not hold, which would also break the 50 then. NASDAQ, we closed below the 50. Look how far. We're pulling a little bit away from the rotation zone on the NASDAQ. The peak for this double was 15,149. And the close was 15,143. So this confirmed but did not trigger it, and it's rotating back down. This will probably be off the table going into the open after hitting. Was really, you see here, even on the 1 hour, there was no reward to risk because that did close above it, but then hitting the first target and boom. So, I mean, these are pretty much done. I'm just going to keep an eye should we retest those levels. Other than that, your next major area on the NASDAQ is coming in 14,922 to 14,875. On the weekly, that's sitting in the middle of the rotation zone and a very key low area from June, from the end of June. You break below that, you can look at the clear path on a weekly basis. I'm not saying it has to go down here right away, but if we bounce and don't get much of a bounce out of this and then take out those this end of June lows, and don't find a lot of support at the bottom of the weekly rotation zone, it could be a bigger retracement. Not calling for that right now, something I am keeping an eye on. Again, from the NASDAQ, it didn't even approach Friday's highs yet, but if we did manage to get a close above Friday's highs, I'd be watching for a little more significant bounce. So I'm still watching for bottoming patterns, but again, they're very aggressive and it's going against the daily rotation zone. At least to get more neutral on the daily, it would have to get a close above these daily rotation zones. Dow still holding up. Last week, it did not take out the low from Tuesday, August 8th at the end of last week. So right now, this is so far on a bigger picture. If you look at the Dow on the bigger picture, this is a sideways correction. Well holding above the breakout levels. So the Dow is holding up the best so far. But if the Dow breaks below last Tuesday's lows, the major target is 34,887. And then you have 34,800. So that would be my target zone should the Dow break below there we you did not get a close above the 62.5, but for a resumption to retest the high areas, I need a close above 35,555 in the Dow. The Russell also holding the 50 and the harmonic area. We break below that. The breakout zone is 1911 and then 1905. You get below 1905, you're into a remainder of a clear path move, with the target being about 1856. So keep that in mind. Where does that put that on the weekly? That could put it all the way back to the 200 area on the weekly. And look, the Russell, you had the tops from last August of 22, so a year ago. We had the top from end of January, and now we have at least a short-term top, and we're a year since the last top, the last major top. So August, January, August. We could still come up and break out, yes, but I am watching, because if we start pulling back, I'm watching at least the middle of this last move, which is around the 200 area. On a daily basis, to get any real traction going, it would have to get above 1980. The breakdown zone you see is right around that 50% retracement. So the major resistance before that is about 1968. We'll get to the spiders, and we'll do it right now, Chris, okay? We'll get to the spiders right now. The spiders. Your key resistance area I'd focus on to the upside is about 445.75. And we're trading pre-market at 444.80. Above that, on any breakout, the next key area is roughly about 447. To the downside, we have some minors still at about 442, or 443. Correction, 443. We break below that. Look where the 50 is coming in with the prior gap that's not filled. So my magnet price for that would be 442.46, 442.50 area should we break below Friday's lows with momentum. So that's it. And you still technically, we are in an advanced clear path move. And if this does for longer term continue lower, your next major target area is 438.18. On the weekly, you see that's right in the middle of the rotation zone. So keep those levels in mind right there. Really on a, if we do get a bigger bounce, not necessarily today, but for this week, you're looking at a major resistance level about 451.50, and it has to close back about 453.40 before I would loosen up a stop and give it a little more room to the upside. Everything else, the same thing I talked about with the futures. Any bottoming pattern for me would be more aggressive stop with not giving it a lot of breathing room because it has not built a solid base yet. And for the Qs, so the third target is hit. The Qs actually did close above the 50. The final target is 363.80, but remember that's a lower probability one. We're trading 365.63 because that goes into the wicks. And remember, when things go into wicks, you focus on the first and second targets, which have already been hit. So that is already hit. Come on. For the Qs, again, any real traction, we have to get a close above 379.25. The major breakdown area in the 50 is roughly about 376. Anything today would be for the gap fill to 366.24 and then 368 area. Above 368, the next key area is about 370 to 370.50. If we start breaking below Friday's lows, 363.80, then 362 are the targets. You're welcome. You're welcome, Chris. Good morning to you too. VIX, look, we're starting to form a slightly more elevated range. Is this in a disaster mode yet? No, but this is, we're getting back into that area from May. But now on a short-term basis, if we stay above 16, then the next key area I'm watching on a closing basis is about 17.10. DAX, we still have this horribly sloppy, messed up double. It's almost invalidated. I'll just keep an eye if we do get a close above this peak. It's still going to matter if we get a close of that peak. 16,123. I can't get overly aggressive though on the DAX either. The notes, this is not enough of a reversal move to be a double. It's more interesting if we get a close above about 111.13 on the notes. Other than that, we've already hit that 87.5. We take out that 87.5, still 109.10, then a possible retest of the lows from October of a year ago. The yield still technically does have a double top, sterling, for the 10-year. But that's a long way off from triggering. The coming down to the rotation, sorry for the back and forth, coming down to the rotation zone, rotating back up. We break through here. It's a possible retest. Now, this is a prime example if you're trading this on the shorter term, the micro yield futures, where I'd use the reverse harmonics to come up with the shorter term targets. Because remember, this is a major topping area. So I'd use these at least for stop raising. The twos still trying to build a bigger sideways base. There is major resistance over here around 5. The 10 twos, nothing's really changed. The dollar index, remember I said watch for it to reconnect potentially with the 200. End of the clear path. We're right, and the harmonic area. We're closing in on that area. So we had the pullback, but no close below the rotation zone. We had that little dip last Thursday, but then now the move up. This is hitting a key significant resistance area. So the major pullback level right now is about 102.20. We start breaking above 103, could get interesting. We also have this declining channeling pattern. We have a lot of resistance over here. But if we break above all of this, short term would be about 103.30. Then I'd start watching the next key resistance area about 103.90 to 104. And that would definitely be a significant shift in the dollar index. So even if you don't trade the dollar index, I would recommend keeping an eye on it. Crude, pullback. Well, as long as we're not really closing below the daily rotation zone about, I'm just going to say right around 80, then everything's normal. If we start closing back below 80, we could retest a major breakout zone and the 200 area again. But crude, I'm expecting another rotation back up. Natty gas, still reversal, and then basing here. So watching to see if we get some kind of move back up there. Gold, and I got to wrap this up really shortly. Gold, not anything yet. We could get a little bounce play here, but I'm still watching for another potential push lower. Silver, we'll just skip that for now. 10 years on the, look at this, 10 years are bouncing back up on the JGBs, which again could put additional market pressure to the downside. Not necessarily today, but we'll keep an eye on this because it's not yet in double top territory. But if this continues to move back up, more unwinding potentially of the carry trade, and the yen breaking out above the highs from July. So my next major target is 148.93 unless we get major intervention. I am on intervention watch also. The euro off the table, confirmed but not triggered, and now breaking down. Going to be paying attention to about 108.80, and then if we break below that, you got minor support. You got minor support coming in at about 108.50, but then there's nothing. I would not be surprised to see this tackle the 62.5 and the 200 on a daily basis, and that would be the first reconnection with the 200 since back in last November. And overall, you do have a sloppy channeling pattern here too. We do have, come on, and look where that's coming in. So, pound, and though if we get a close below 102, 126.21, we'll watch for a retest, and we'll probably tackle then the 200 on the pound too. So the dollar could have some more, just look at the pound. the euro, we could have some more upside play in the dollar. Tesla, looks like we're gapping down based off more price cuts. We can start getting into an advanced clear path move down here. The key major levels to watch for Tesla on the downside, 226, 207. Any rally I will be looking for, any sell setups on Tesla. We're breaking below the key support. We're now below all key moving averages besides the 200. We got gap fills to the downside. You do have a gap fill to still 234.86, which is trading just slightly above pre-market. NVIDIA also is definitely broken the pattern. So any bounces I will be looking for sell setups also with the first cross the rotation zone. And we're into the weekly rotation zone area. Major support coming in the back at 376. So you can see the nature of the markets are shifting. That does not mean we won't get rallies. That means, from my perspective, be aggressive on stops on rallies. You don't want to give it a ton of room because we could get rollover plays sooner than we think on rallies. We're not just going to blindly buy the dip. With that, I've got Tesla PMG. There you go. I think that's my thing on Tesla's overall. Rallies, sell them. We got gaps left behind. I'm going to be watching my first major target. First major target is 226, and then I'll be watching for a reconnection with the 200. But my target before that would be 207. Just a recap there. Sorry, I got to run now. I will try to get this in again tomorrow. It might be even start a few minutes earlier than today. If you're watching on demand, thank you for tuning in. Talk to everyone later. Bye for now.